So far, we have learned about blockchain, about digital currencies, about central bank currencies, and the scope of law around cryptocurrencies. The obvious question then is, how does a cryptocurrency actually work? We know how rupee works. It is backed by the government, and therefore we trust it as a medium of exchange. But what about crypto? Can it be a medium of exchange like a rupee or dollar? To answer that, we have Mr. Samrat Kishor, a seasoned tech cum strategy consultant with over 13 years of professional experience working on tech risk, tech strategy, innovation, and M&A programs. He is also a member of NASSCOM's Blockchain SIG and GIFT Blockchain Asia chapter. Thank you, Mr. Kishore, for joining us today. Over to you.
Hey, Chiranjeevi. Hi, is my audio good?
Yes, sir, it's great.
Okay, perfect. Thank you. The conversations so far have been really engaging. Really, what should I say? I was totally hooked, and Swapnindu and Malik, I think, great chat and great perspectives brought in. So kudos on that. Thanks a lot, guys, for having me on board and to talk about cryptocurrency. I think it's a very interesting subject, very close to my heart. I've been in the crypto space, so I was doing a little bit about how I got interested in cryptocurrency, and then I'll get on with the session. So I did a small program. It was a diploma in cyber law way back in about 2013, and then I got interested in the dark web, how Bitcoin was being used for transactions on the dark web, and that got me excited about the currency. I said, okay, fine, there can be something which is not traceable. Although there are negative sides to it, but there was also a positive side to it, that it could travel across borders almost instantly. So yeah, I think I got lucky. I got into the crypto game very early in about 2013 or so. So yeah, hodlers rise and shine. I'm sure there are other hodlers as well on this call. I have a small presentation. Being a consultant, I just cannot do without slides. So I prepared some slides. It is only to give us some talking points about cryptocurrencies, just to keep a direction to the conversation. So do I have? Can I share my screen here?
You should be able to share the screen, sir.
Yeah. Actually, I don't see the option. How come?
It should be at the bottom pane of your screen, I believe.
No, I know that. I was just not getting that file in the things to show.
I believe we are now live. Yeah, we can now see the presentation. Sir, if I may request you to turn.
Now you have it. So. Yeah. Okay, great. So I'll start with key concepts, and then I'll keep it very short, because I'm assuming that the audience have been through some very mature discussions in this session. So, I will rather allocate more time to answering questions like, what is cryptocurrency not doing, and that sort. So this talk is basically divided into 3 segments. One, I've put in some key core concepts of what comprises of a cryptocurrency. The next section is about some general terms which are prevalent in the crypto space, and the third one is about evaluating a cryptocurrency. So a lot of cryptocurrencies are out in the market. People hear new names every day. People change chats on WhatsApp. But I've just tried to put a framework around evaluating any cryptocurrency, whether it's good or bad, whether you should be supporting it or not. So I think so far we've established the core belief that cryptocurrency is here to stay. Now even corporates have come in, and I think Elon is doing a great job in driving adoption. So now even corporates have come in, and they've started taking the currency to the books, which is a great step. We're actually seeing history being created right in front of our eyes. So very interesting times to be in. I'm glad, and I congratulate the people who are on this call, um, learning about cryptocurrency and forming their opinion about cryptocurrency. I think forming your opinion is extremely important about this key concept. Sure. So I will go on to the first point. What is cryptocurrency? Let's start with uh, the very basic notion of what is a cryptocurrency. It's a digital asset, which is a storage of value. Consider it like a block, like a box, which can be used to store multiple things. Now, those things are all decided by the creator of the cryptocurrency. It's decided at the time when the cryptocurrency is getting created, so it cannot be changed while the cryptocurrency is out there in the market and there are people holding it. If at all any logic needs to be changed in the cryptocurrency, there's a process to be followed. You have to gain majority consensus, and that process is called forking. Um, the first core concept, as you see on the screen, is it does not require a central authority. That's extremely important to understand. There is no central authority to it. I remember having a conversation a few days back with somebody who wanted to own a franchise of a Bitcoin company. It was actually a crypto company which was trying to expand into more geographies. They said, "Oh, you know what? We need to have an authorization letter from Bitcoin saying that we are authorized to sell Bitcoin." And I said, "No, there is no Bitcoin which can give you an authorization letter." And then I spent the next 30 minutes explaining them why there is no central authority giving them that certificate. So there is enough, there is enough material out there in the market to study and understand the currencies. But the key core concept here is that there is no central authority in any of the cryptocurrencies. The way it should be designed. And so its state is maintained through distributed consensus. Now that literally means that people who are owners of the currency, who are on the network, are the real ones maintaining the ledgers. They are the ones maintaining which account has how much cryptocurrency in it. So the accounting mechanism for cryptocurrencies is called blockchain, as you guys have already established. Coming on to the next point, the system keeps an overview of the cryptocurrency units and their ownership. So this is very, very important. Cryptocurrency, just like any other assets or commodities in the real world, are driven by demand and supply. So it's always important to understand what's the supply of cryptocurrency, how many units actually exist, and who owns how many units. So all that accounting, all that ledger has to be maintained within the network. That's extremely, extremely important. These are again concepts of a good cryptocurrency. There are bad cryptos as well. If you go back maybe 2 or 3 years, we will see a lot of examples of bad cryptocurrencies. Third one, predefined rules around creation of new units, transfer, and tracking of ownership. Extremely important. At times it is also termed as tokenomics. It lays down the foundation of foundational rules. It lays down the rules around how are new tokens generated and pumped into the system. So and how is transfer happening? What will be the rules for exchange of hands? And then how will the ownership will be tracked? Whether there'll be miners for every transaction, whether there'll be so consider miners like people who are providing attestation services on every transaction. So while a currency is getting created, you can always define how many people on the network have to really agree to that transaction. You can also define designated people who are agreeing to a particular transaction. So what should I say, recipe of a cryptocurrency, it's all supposed to be decided right in the beginning. And that's why I said predefined rules around creation and transfer units. Um, then ownership of cryptocurrency, ideally it should be proved exclusively, which means you do not need people to come and you do not need a central authority. As I said, there is no central authority in a cryptocurrency, so you do not need a central authority to come and prove that you hold a particular cryptocurrency or what amount of cryptocurrency you hold. You just have to show your wallet, and in the ideal scenario, that wallet is available it's open to the world to go through it and to audit the transactions which have happened in the wallet. So there's a concept called pseudo anonymity. on which the cryptocurrencies, the public cryptocurrencies operate. This pseudo-anonymity basically means that you do not, while we are not establishing identity, we are still tracking wallet ownerships. So these wallets are nothing but a store of your crypto tokens, and they have a unique address. That unique address can only be one in the whole world. So you have your wallet, which is very unique, and that is storing all the currencies. So the ownership, which is actually your wallet, is, it can prove your holdings, but it can never be tied back to your name unless you want it to be. So that's the concept of pseudo anonymity, that while everything is out in the open, everybody can audit wallets. Everybody knows, here is a ledger of all wallets. These are the holdings inside every wallet, but nobody will be able to establish that, yes, this is Samrat's wallet, and he's holding this much cryptocurrency, unless you go out in the world and you publish it. Next concept, transactions are allowed on the network which facilitate transfer of ownership. I think this is extremely important for anything which is supposed to be called as a currency. The facilitation of transaction has to happen. Next one, extremely important. That's why I kept it in the end. That's probably why, then, that's what gave birth to Bitcoin, when Satoshi was actually able to solve this problem of double spending. So any digital currency, the biggest problem is that you can spend the same money twice. And Satoshi solved that problem by use of blockchain, or the consensus mechanism. And that is why the any good cryptocurrency, the way it is designed, it should stop people from double spending tokens. So that means if you have, let's say, 10 tokens in your wallet, you should not be able to spend the same 10 tokens. You should not be able to transfer the same 10 tokens to two people. So that's an extremely important concept, double spending, and every cryptocurrency should block it. Okay, how are we going to do this? Are we going to have questions right away, Chiranjeevi, or should I just proceed?
Thank you, Mr. Kishor, for that presentation. Now, Bijoy Sankar Saikia, editor at ETMarkets.com, will be joining the conversation for a quick, Q&A session with Mr. Kishor. So, over to you, Bijoy, sir. Bijoy, sir, can you hear us?
Am I audible?
Yes, you are. Yes, you are. Thank you.
Hi, Samrat. Great presentation. Actually, you have decoded the entire thing very nicely. Thank you so much.
Hi, Bijoy. Yeah, I would go through the key terms as well. But yeah, your questions are.
We can have another 5-10 minutes. Actually, a lot of audience would be very new to these concepts, and I think that will be wonderful and a great value addition if you can do that.
Sure. Awesome. So I will start with tokens and altcoins. So these are so any these digital assets that we are talking about, they're termed as tokens. So you will read a lot of articles where you'll see cryptocurrency as one word, crypto space currency, or just tokens. All of them are practically the same. And altcoins. So this is very important. Bitcoin was the first cryptocurrency, and the believers of Bitcoin, the way they see the world, they say, you know what, this is Bitcoin, and then the rest of the world. So that's why everything else is it came to be known as altcoins, alternate currency. Anonymity I've already spoken about, so I would not go there again in the interest of time. Mining I've already spoken about. That's the consensus mechanism, how you arrive at the legitimacy of a transaction on the network. Fungibility, very important concept. Fungibility means that whether the tokens can be stacked or not. So imagine it like Indian rupees, for example. You can put two 100 rupee notes and make it 200 rupees, right? And then you can also break them down into further smaller denominations, but the summation will still be 200 rupees. Same applies to tokens as well. So these tokens can all be clubbed and then be created into larger blocks and smaller denominations, etc. But then there are non-fungible tokens as well, NFTs, and a lot of gaming applications, a lot of entertainment applications. The biggest application that I know about is called CryptoKitties. So they give very unique kitties to every owner. So you can actually buy a non-fungible token. It's a very unique token which is just created for purpose, and you can actually store it. Just like an asset, but it is unique in the world. There's never a second asset to what you have. So that's the fundamental difference between fungibility and non-fungibility. Extremely important for you to evaluate any cryptocurrency, whether the tokens are fungible or not. Wallet, again, I've spoken about wallets. There are there can be hardware wallets as well, by the way. So extremely important to understand, again, from a security perspective, that I have seen people losing out on their cryptocurrency. They store their wallets on their laptops, and then their laptops crash, and their money is gone, or their laptop is stolen or something, and their money is gone. So a lot of times this also happens. I myself have lost a lot of cryptocurrency to one hard disk crash long time back. It brings back a lot of bad memories, but yeah, it's an experience which I can share here. So be sure that you diversify. Be sure that you maintain your wallets either on the cloud or Then I also moved on to a hardware wallet. So you can also have a hardware wallet. It practically looks like a pen drive. You can store your cryptos and be done with it. So you'll not rely on one piece of hardware. Then exchanges, again, an important concept to understand in terms of cryptocurrency. So while we've spoken about cryptocurrencies networks, what is your gateway to access those networks? Either you become a participant and you start downloading the whole blockchain and put in all your computing resources into just maintaining the ledger, which may be for nothing because you are a very small participant in the whole network. The second way is going via an exchange. An exchange gives you access to participate in the crypto world by going and buying cryptocurrency. They're giving you a gateway. So what they'll do is they'll take your fiat currency, which is regular currency, your Indian rupees or US dollars, and in return to that, they will give you the currency of the cryptocurrency of your choice. So it may be Bitcoin, it may be Ether, it can be actually anything. Then that currency you can store in your wallets. It necessarily does not require you to store the currency in their wallets, while the exchanges also offer the wallets. You can have your wallets wherever you want. So a lot of flexibility is there. At this stage, I'd also like to talk about hacks. So a lot of times it's in the news that particular currency got hacked. It's not actually currencies getting hacked. It's the exchanges getting hacked. And there have been some pretty nasty hacks in the past for these exchanges. So those are some fundamental things about cryptocurrencies, and yeah, the model that I spoke about for evaluating a cryptocurrency, a good cryptocurrency. There's no formula for it, but I think all of us should have a value system. How do we approach a cryptocurrency from the perspective of, let's say, investing or believing in it or something like that? We can start from the left-hand side, which is trading volume, whether there is liquidity in the system or not. So trading volume, typically you can go to exchanges, you can go to a website called CoinMarketCap, etc., and you can see whether the currency is moving or not. Moving in the sense, are people buying and selling the currency or not, or is it just sitting idle? Whoever has it is just holding it, or people have just given up on it and they've just left the system. So that's why understanding the trading volume is very, very important. And the same also goes with market cap. So you should also always look at what's the market cap of a currency, which means that if I were to liquidate all of it, what is the value will I get in terms of US dollars? So whether that US dollars value is increasing or decreasing. So you would have heard very recently Bitcoin hit a market cap of $1 trillion. How does that happen? Because the dollar value per Bitcoin was increasing. So you multiply that with the total number of Bitcoins in the world, and then you get that market cap. So it's always good to evaluate a currency by looking at what's the market cap, whether the currency is really appreciating in value or not. Then there is token economics. Again, as I said, rules around how the tokens are created, burned, um, transferred, etc. What's the science behind or the economics behind the tokens we're talking about? Then novelty of the idea. A lot of times these crypto tokens are backed by ideas. So people would say, you know what, you buy these tokens from me, and then in future we're going to launch a bank, and you're going to get part ownership in the bank and stuff like that. So you always have to evaluate what's the idea, and the next point, what's the team behind building that particular cryptocurrency. Then circulating supply. So whenever cryptocurrencies are launched, they're always the team actually.
Mr. Kishore, may I interrupt? I think your presentation is no longer visible. So if you could share your screen again.
Oh, it's not visible.
Yeah.
Oh, okay. Yeah, are we up?
Great. Thank you.
Okay, cool. So circulating supply. I was talking about what portion is open to the market. So when the team comes up with an idea and with token economics, they also explain what part of the tokens, the whole the 100% tokens getting generated, how much are we retaining for ourselves versus how much are we actually letting out in the market for people to buy and to trade. So you should always keep a check on that. There are some thresholds, some good practices of the crypto world to watch out when you're evaluating a cryptocurrency. So that brings me to the end of my talk. Bijoy, any questions you've received from the audience? Would you like to answer to ask any questions?
Yes, there are actually plenty of questions from audience, of course. In fact, you'll be amazed. We have questions from very senior management of companies and technologies, techies, in fact.
Mm-hmm.
But I myself have a lot of questions. In fact, going through your entire discussion, they are related to mostly use cases. You said you yourself are an crypto investor, right? You said you have some cryptocurrency as well. Now, when you invest in a cryptocurrency, this is not yet for used for transaction, etc. Right?
Mm-hmm.
What is the motive with which you are going out and putting your money there?
So I would say the investors, anybody who's terming themselves as crypto investors, should just consider it as one of the asset classes. So I'm not saying put all your money in or put your lunch money into cryptocurrency. It's just an asset class, the way I see it. Plus, at times I have found value in making payments overseas, etc., or exchanging one currency for the other one. So that's the reason I keep holding a lot of cryptocurrency, and that's the sole reason other people should also invest. Eventually, um, eventually, see, it's like an asset, and if you are able to make returns out of it, and you're able to pay taxes and justify your income out of it, I think nothing like it. It's beautiful.
When you call it an asset or maybe an investable asset, the problem with this, in fact, we keep referring to it as digital gold and stuff like that.
Yeah.
But the problem is that it is not an asset-backed, typical asset-backed kind of an asset, right? The problem there is that it's driven by speculation and demand and supply and things like that. It's the rarity of the asset that is what is probably driving its demand, right? We keep talking about how Bitcoin is just it, we will shortly reach its peak point or something like that in terms of supply. Now, when an asset is not backed by asset, when a financial instrument is not backed by asset, the risk is that it depends on perception. Like more than gold, because gold has some use cases. If I compare it with say if painting, right? It has its demand for the person who appreciates it. Otherwise, tomorrow, if somebody who doesn't appreciate it, even Leonardo da Vinci probably could be lying in some storehouse. We have those instances like that. Now, what happens? It becomes a very kind of an alternate asset class, very high and kind of a very risky asset class.
Yeah, you're right. So, Bijoy, great point you brought up, which was around being backed by an asset. So, a lot of cryptocurrencies, it's like types. As I said, you have to evaluate cryptocurrencies before you put in any money. It's a big disclaimer. Please don't go on what I say, but do your own your due diligence. Anybody who's watching this. So, Bijoy, as you pointed out, it's not backed by assets. So, there are currencies which are backed by assets. I have personally worked on 2 projects where currencies were backed by gold, physical gold being kept in vaults and being tokenized and then part ownership given to people. So yes, I do agree. And as I said, there are other asset classes as well. If you go to stock markets, they have circuits, they have circuit breakers, and you can still protect your money. But once cryptocurrency starts falling in value, there's just no way to stop it. So it can actually, so it's totally market driven, and that's why I also brought in one more point around liquidity. Whether will you be able to sell it or not? Because I have seen there are times when people are locked up with their cryptocurrency. So it's a very risky asset. Yes, extremely risky asset. People should only put in money if they're happy to lose it.
Wonderful. That's I think
Yeah, that's something which I tell a lot of my cousins, a lot of my colleagues, co-workers, friends ask me about things, and I keep telling them that put in money only if you are okay to lose that amount of money and does not make a big difference to your entire portfolio. But look at the upside. What if you end up making money? That is exactly what happened with a lot of people when Bitcoin started soaring in the past 2 months. As you would have seen. So yeah, it's a risky game.
Great. You brought out the issue of liquidity. The thing is that again, you said that you might lose the entire money. The concern that a lot of people would have is that when I hold a rupee note or maybe a dollar note, right? It is being signed by the central banker saying that, okay, I owe you this much of money. Yeah. Whereas in case of a cryptocurrency or Bitcoin, nobody is giving you that guarantee, right? So there is a risk that if tomorrow that trend actually collapses, that something, a lot of regulation comes in and the sentiment goes negative, the asset class might just fall flat.
Absolutely. In fact, the only the degree of confidence. I mean, when I started investing in Bitcoin, there was absolutely no way we could get any assurance. But now, at least you have market assurance saying, there are the biggest of the banks, biggest of the corporations supporting this currency. So at least you're part of a clan, which has sizable amounts invested in this currency. So if something happens, it will happen for the entire group. So you will still be there. A lot of media, as you can see, this is ET Conclave, right? So a lot of media attention has also come to the cryptocurrency. But yes, there is no way to even say who's Satoshi, right? So Satoshi may be anywhere, sitting, smiling, sipping a cup of tea, and he may decide that it's time to move on to something else.
Right. Also, we keep hearing that there are about 7 to 8 millions of Indians who are investing in cryptocurrency. You being in the system, how do you describe of course, it's non-identifiable, as you said, you don't know who he is.
Yeah.
How do you describe the average Indian Bitcoin investor? Yesterday, I was talking to somebody from WazirX, and he was telling me, these are like 28 to 30 kind of people.
Yeah.
In fact, in this conference itself, the people who are registering, I have, some of the senior executives who are asking very basic questions about cryptocurrency and Bitcoins. Obviously, there is a lot of gaps in terms of awareness. So who is the average Indian Bitcoin investor? How do you define him?
Well, I think they're largely people who understand tech. First of all, the personas. If I were to make a persona for a crypto investor in India, they understand tech. They are it's the same age group as you said. They have some disposable income. I would not say a large amount of people who do not have disposable incomes would be putting in money here. So they have disposable incomes. They have fair understanding of tech, etc., and they have a big feeling of FOMO. It's largely driven by the feeling of missing out. It's like I'm sure somebody somewhere has come up with a word for Bitcoin FOMO, but yeah, it's largely driven by that. So I've known people, just for the sake of posting on Facebook that I'm an investor in Bitcoin. They've bought Bitcoin and they've started posting it. But yeah, it's one thing which I do believe, it's a fact, and I'm thankful to ET for organizing sessions like these, that a major chunk of the investors in cryptocurrency do not really understand the science behind it. So that's why I came up with these 2 or 3 concepts for evaluating currencies before you put in any money. It's important.
Right, but it may generalizing maybe a little bit risky, because one speaker, in fact, in one of those panels mentioned that some of the even corporates are looking at putting their treasuries in crypto. In fact, Tesla is already doing it in some cases. And in fact, it has got a lot of endorsement on Wall Street.
Yeah.
I saw some tweets last week on the Wall Street itself. Some people are saying that the time has come, but someone like Rakesh Jundunwala saying no, currency is in the domain of only the sovereign, so it should not exist at all. Anyway, my last point, because another speaker is waiting, your next speaker. Who regulates there has to be some kind of regulation, some answerability somewhere, right? Right now, we don't have any defined regulation right here. So under whose domain is it coming right now?
Sure. So I can, with my limited knowledge, I can just take a guess. The only reason why some governments have not accepted and some governments have accepted it is because cryptocurrency cannot be tied to a geography. So you never know. I may buy a Bitcoin in Australia, and I may, in the next minute, I may just sell it in Dubai, and I may make a killing out of it, just by because it's all an exchange. It's all exchange. It's all spot prices. There are tons of companies I know about who are working just on arbitrage. They just buy Bitcoin from somewhere else and sell it somewhere else. So currently there is no one authority, as you rightly pointed out. The governments are wary of this because since it is not tied to a geography, it cannot be taxed. So they only go after the income which is being made out of cryptocurrency, and then they can tax the individual. So I may be sitting in India trading in 2 or 3 countries. So the Indian government will then know that yes, I've made some money out of selling it, but then they don't know which kind of tax is applicable to me. So generally people end up paying the highest slab of the tax, whichever is possible, because they've made a lot of money and they feel that it is fine if the government wants a piece of it. So I don't want to go against anybody, but I think it's a big claim for me to say this, but I would say it's become so huge, or it is poised to become so huge, that there has to be a global arrangement, a global agreement around it, something like on the lines of Paris Climate Agreement. The governments have to come together and talk about it.
Yes. Fingers crossed, Kishore. We hear, in fact, today, RBI governor said something.
And in general, I feel from the perspective of future of cryptocurrencies, I feel there are 2 or 3 points which I'll just close my talk with. One is moving towards efficiency. So as you would have read in the news sometimes, that the Bitcoin is only the Bitcoin network, and there are other currencies as well. Only the Bitcoin network is consuming more electricity than a small country, right? So we have to move towards. We have to also care about the planet and not just our pocket. So at times we have to move towards greener currencies. Second is atomic swaps. I think that's one upcoming field. Atomic swaps is nothing but swapping one currency to the other without the need for intermediaries. So currently it's happening via exchanges. There are companies and there are technologies being developed towards atomic swaps, and I think once that comes into play, you'll also see one more boom.
Right.
Not just one cryptocurrency, but multiple cryptocurrencies.
That helps that liquidity issue as well.
Yeah. And the third thing is, higher acceptance by the banks for on-ramp and off-ramp. So on-ramp and off-ramp is when you convert your fiat currency to cryptocurrency is on-ramp, and off-ramp is when you convert your cryptocurrency to fiat currency. So higher acceptance for these transactions. So it should ideally be just sold like any other commodity,
Right.
So yeah, these are three things which I see as the future towards driving higher adoption. Thanks, Bijoy, and efforts like these.
I must say it was almost like a mini masterclass. Yeah, you were so thorough and through all this and very articulate and simplified every terminology and concepts. I really got a lot more enlightened after this session. Thank you so much for joining us, Kishore. Hope to talk to you again on another platform on this topic. I think sure, this is something that is probably going to stay and will keep us on our toes trying to
Yeah.
understand and decode things for our readers. Thank you
Sure.
so much. Thank you.
Thanks, Bijoy. Thanks, Chiranjeevi.